Are tech firms the new tax dodgers? Anton Troianovski has some interesting information about this, and he joins us on the set now. And Anton, we've got a soundbite. Thanks for joining us. We've got a soundbite from the CEO of American Tower, and he's talking on CNBC. Listen to this.
Should we think of you as a real estate company?
I think you should feel that we're a growth company that's taken advantage of the real estate trust structure. And by that, just simply meaning we're going to be able to have an advantaged tax position for our shareholders by electing this kind of corporate structure.
That was the CEO of American Tower. Anton Troianovski's written about this particular thing that he's talking about. He seems to want it both ways. He wants to be considered a tech or a growth company, but he also wants to be considered by other people to be a real estate company.
Right. So this is getting into a debate that's really starting to play out both in the real estate industry and in parts of the tech industry, which is what is a real estate company? As I'm sure you know, there is a tax law in the U.S. That provides for something called a real estate investment trust, which is basically a vehicle that owns real estate, collects the rental income from the real estate, and redistributes that to shareholders in the REIT.
And it's very tax advantageous for the shareholders of the REIT.
Right, because the REIT does not have to pay corporate taxes. The idea is it's a pass-through vehicle, sort of like a mutual fund or something. You know, because if you were to own a building directly, you wouldn't have to pay corporate tax on the income. You just pay your own tax on the income. So, REITs have been around for decades.
Give us some examples of the companies here that are doing this.
Right. So REITs have been around for decades. Most of them are like, office building owners, shopping mall owners, et cetera. But there are more and more companies coming in that do non-traditional real estate.
Like American Tower, Equinix, Iron Mountain.
Exactly. So American Tower runs cell phone towers, Equinix runs data centers, Iron Mountain does records management and storage. So they're all arguing that they are real estate companies.
So wouldn't it be the case, right, that every company that has does work in a building, so I guess that would be everything except outdoor agriculture, could say, well, actually, we're in the real estate business. Doesn't this make a mockery of the tax code? I'm sorry to be blunt about it. I mean, is it
fair enough? No. So
are they laughing at us?
There is a difference here.
Okay.
You have to not only show that you have a lot of real estate and use real estate, but that most of your income comes from is real estate related income. So that's the big question. So there is what you said, there is definitely that sentiment in the so-called traditional real estate industry right now, at least among some people, that there is a risk as these other companies come in that people in Washington say, wait a minute, why does a data center operator get these tax breaks?
And there's also a risk that they get a visit from the tax man.